We have Rajeev Agrawal of the Doordarshi India Fund joining us. Rajeev, hi, morning, and thanks for your time. First of all, lots to talk about. Accenture's earnings, US macros. Let's start by talking about the US macros. Your take on the CPI numbers and the jobless claims numbers that have been softer than estimates, but a lot of reports are also stating that the CPI numbers could be distorted due to the government shutdown that was underway recently. What is your take on the CPI numbers? Where do you believe, or rather, what do you believe the real picture here is?
Yeah, good morning. The CPI numbers, as you rightly pointed out, given that there was a government lockdown, really these numbers have to be taken with a grain of salt. And it was very interesting that the Fed governor in his speech talked about on the employment side that maybe the employment has been weak and some of the employment numbers that are getting reported are maybe on the higher side than what he believes. So clearly there is a lot of ambiguity in the data that we are seeing. And it is very hard right now to make a sense. I think clearly the bottom segment of the society is hurting more because of the way inflation that is going on in the economy. But other than that, everything else really we will have to wait for a few more months to get a better sense of that.
Rajiv, hi, very good morning, or rather good evening from where you are at. Harsha,
Yeah.
Rajiv, give us a sense as to how much headroom does this leave the Fed with regard to a rate cut? Because 2.7 is still above the band or the kind of target that the Fed has with regard to inflation. But you're also seeing the labor market start to cool down and cool down substantially, right? So how much of a case is being made currently, and can we expect the terminal or the FY26 end to likely be 50 bips or 75 bips lower from where we've ended 2025?
I think it's very interesting because this next year will be a juxtaposition of how the economic numbers are, but also what the political reality is. And the political reality is that we will have a new Fed governor. Clearly, that Fed governor will be dictated in terms of the US president will make that decision. And US president has been very vocal that he wants lower rates. So it is possible that the economic numbers may not completely support rate cuts, but based on what I have seen, my assumption and our assumption here at Doordarshi Fund is that we think that there will be at least 4 cuts going into all of calendar year 26, which is quite different than what some of the brokerage firms out there are mentioning. And we think it's much more an outcome of what the political parties want rather than necessarily the economic realities.
Rajiv, how do you see the macro picture globally, turning out in 2026? Today we have the Bank of Japan, which is expected to come out with a rate hike, and once that happens, there will be some changes the way flows are going to move out from some of the developed or emerging countries.
Absolutely. I think we are having this difference where US is cutting rates. On the other hand, Japan now is increasingly having to raise its rates because of the inflation that we are seeing there. So I think the whole carry trade is obviously going to get impacted, and that in turn will impact the currencies in a major manner. And as we all know, in Japan, they have a much higher debt to GDP. So as the interest rates rise there, the cost the interest cost on the debt will go up meaningfully. And I think it is frankly a mixture of economic realities and the political realities that will actually happen. Because clearly, if there is, for example, trade deals that happen with various countries and they have been announced, but there are still back and forth that is happening. So I think those will also have an impact. So I think it will keep us all busy going into 2026 and beyond.
Okay, so lots to watch out for. And lastly, Rajiv, also give us your view on the commentary that we've had from the central bank action that we've seen yesterday, ECB and the other one. So give us your sense on where the global economy is headed in terms of central bank action. Because when we were speaking to another expert yesterday, he was of the view that the world is now gearing up for an overall economic softening and a slowdown from here. Is that the view you share as well?
Yeah, so I do agree with that the economic growth next year will be slower because, there is a lot more of friction that has come in the global trade. And whenever you add friction, that means that the global trade is not as optimal as it can be. And therefore, that will not allocate resources in the most efficient location. So I do think these things play out over time, multiple quarters, maybe multiple years, but that will be a headwind to the global growth. Clearly, what Europe is going through is slightly different than what Japan is going through, and European Central Bank held its rate. So clearly, there are many very different dynamics, and how it will play out remains to be seen.
Okay, Rajiv, thank you so much for that, for giving us that perspective from the global side of things.